No? You can't see the times, but this bottom is exactly at 10 o'clock. The rally stops dead in its tracks at the flat 200 period moving average exactly at 11:15. Rally right into the 11:15 time frame, also coinciding with the flat 200 period moving average. I want you to note that, of course, this is lunchtime and the stock goes flat. Now, what's interesting is that the 200 does not cause the stock decline. It just causes the stock to go flat just beneath the surface. That's a very bullish stock. That once the stock breaks through, we're looking for this last move before the pause to be continued. This breakout to a new daily high, which also coincides with a breakout above the flat 200 period moving average, happens at exactly 1:30 Eastern Standard Time. Very major reversal time in phase 2. And at 3 o'clock, the stock basically stalls, takes a dip toward the rising 20 period moving average, and blasts off right into the close. This bottom, the bottom of this dip, occurred at 3:30 Eastern Standard Time. Let's go to the next chart. Here's a 5-minute chart of Apple Computer, where the stock initially rallies briefly and then drops right into the 10 o'clock reversal period. The exact bottom forms at 10 o'clock and then rallies to retest the high of the day right at 11 o'clock. After 11 o'clock, no more buying interest. Our market makers get hungry, and the stock drifts back to now retest the day's low. It is exactly at 1:30 Eastern Standard Time that the stock stops its drift to the downside and starts to blast off to the upside. It is exactly here at 2:15 that the velocity of this up move quickens. I want you to note that at this particular point, right at 3 o'clock Eastern Standard Time, the 5-minute chart of Apple was a very decent distance away from the rising 20 period moving average. Remember, stocks cannot remain too far extended above their and below their 20 period moving average without being called back in. So exactly at 3 o'clock, the stock being far away from its rising 20 pulls right back into the close. Here's another example. 5-minute chart of AMAT, Applied Materials. We have an initial move at the opening, at the open, initial move to the downside, which bottoms exactly at 10 o'clock. At 10 o'clock, a very fierce rally right into 11 o'clock starts. At 11 o'clock, our market makers in the stock get hungry, start to weed off to lunch, and the stock drifts all the way back to the downside during parts of the midday doldrum. All right? Now, most of you will know from your charting knowledge that this is called a double bottom. The double bottom forms exactly at 1:30 Eastern Standard Time, putting in its midday doldrum bottom. The stock then rallies right into a 3 o'clock top and then declines right into the close. It is at these times, ladies and gentlemen, that we are looking to step into the market. It is at these major reversal times that we look to profit from this very frequent turning, these very frequent turning times. Any questions so far? Does that mean I'm doing a good job? Yes, sir.
When you say 20-day and 200-day period, you mean to say it's a day?
No. The question was, when I say 20-day, 20 period moving average and 200 period moving average, do I mean 20 days and 200 days? No. I specifically use the word period. So you are measuring on a 5-minute chart. It's averaging 20 5-minute periods. The 200 is averaging 200 5-minute periods. You just set your parameters to the 20 and 200, and it's going to measure the bars. Okay? Any other questions? Yes?
You said earlier about the phase 3 that it was more definite. You like you'd like to teach somebody to trade phase 3. Is that does carry through on that? That the 2:30, the 3 and 3:30 turnaround, 2:30, 3 and 3:30 are.
Well, we are going to cover specific trading tactics for each phase. So each phase, I'm going to share with you specific tactics that are specifically designed to profit or take advantage of the things that happen in each phase. But what I did say is if I had to pick one phase to teach, it would be trading tactics for phase 3. It's the easiest and the most reliable phase of all 3. Okay, let's continue. Phase 1 trading tactics. Now again, phase 1 starts at 9:30 and ends at 11:15. We have 5 tactics to exploit these reversal time frames in the first phase of the day. The first tactic is called the 9. It's actually, this should be 35. It's the 9:35 breakout or breakdown play. We'll talk about that. The second tactic is called the 10 o'clock reversal play. The third trading tactic is called Pristine's 30-minute trading rule. And we'll talk about these in greater detail. The fourth tactic is called the 11 o'clock topping or bottoming play, depending on the direction of the stock at that time. And the fifth and final trading tactic is based on the 200 moving average, which is why we call it the 200 moving average trading play. 5 trading tactics or concepts that are specifically designed to take advantage of the things that happen during phase 1. Let's take a look at a 5-minute chart of VRTS, Veritas Software. I want you to note that during the first 5 minutes of the trading day, the micro trader is on the edge of his or her seat watching stocks, his or her collection of stocks very carefully without any action. The micro trader understands that the first 5 minutes calls for no action, according to our philosophy. It calls for watching, particularly those stocks that gap up or gap down. So the micro trader is going to watch his or her collection of stocks for 5 full minutes. And what we have found is that stocks after 5 minutes will often, after 5 minutes, reveal their first move or trend of the day. And we determine what trend that's going to be in by whether or not the stock trades above the first 5 minutes of the trading day or trades below the first 5 minutes of the trading day. If the stock, after 5 minutes of trading, trades above the first 5 minutes of trading, many micro traders enter the stock long with the idea that the stock will run up right into 10 o'clock. If, after the first 5 minutes of trading, as is the case with VRTS, if after the first 5 minutes of trading, the stock breaks below the low established during that 5-minute period, many micro traders will try to go short the stock with the idea that the first move of the day will be to the downside right into the 10 o'clock reversal time frame. So the micro trader wants to try to capitalize on a 10 or 15, maybe 20-minute move after the first 5 minutes of the trading day. So after 5 minutes, the micro trader is going to mark off the high established during the first 5 minutes of trading. He's going to mark off the low established during the first 5 minutes of trading, and then see which way the stock breaks after that first 5 minutes. If it breaks upward, they're going to go long with a stop, a protective stop, below the low of the first 5-minute bar. The idea is that the breakout above the first 5-minute high will rally right into 10 o'clock. If the stock breaks below the low established during the first 5 minutes of trading, the assumption is that it will drop all the way back into 10 o'clock. So the object is to take advantage of this micro move break out to the upside or break down to the downside right into 10 o'clock. In this case, VRTS opens up around maybe a little shy of 72, establishes its first 5-minute high and low. The next 5-minute period is a pause. The third 5-minute period cracks the low. This is the first bar that violates the high or low of the first 5-minute bar. In this case, the micro trader will attempt to get short. As many of you know, getting short is difficult because of the uptick rule. But the micro trader will try to get short the stock slightly below 72, and as you can see, the stock drops over the next 15 or 20 minutes all the way to $68 right into 10 o'clock. And it is by no surprise that VTRS bottoms exactly at 10 o'clock. At 10 o'clock, if the stock has moved down into the 10 o'clock period, the micro trader, having profited from the downside, will oftentimes attempt to now trade the stock above the last red bar around 10 o'clock with the idea that the next rally is going to rally right into the 10:30 reversal time frame. If you look at this 5-minute chart of VRTS, the stock bottomed at 10 o'clock. The micro trader, aggressive micro trader, understanding that 10 o'clock does typically produce major reversals, would attempt to go long this stock above the last red bar with the idea of the stock rallying right into 10:30. Now, you can't see the times on this chart, but this stoppage at the declining 20-period moving average occurred at exactly 10:30 or around 10:30 Eastern Standard Time. Another example. This is an example of the 935 breakdown strategy. NTAP, network appliance, gaps to the downside. The micro trader does nothing at the open. The micro trader lets the stock trade for a full 5 minutes with no activity. After 5 minutes, the micro trader marks off the high and marks off the low. As we see on this chart, the next 5-minute bar violates the low established during the first 5 minutes of trading. That micro trader attempts to get short with the idea that the stock will drop all the way into the 10 o'clock period. The micro trader gets short and right into the 10 o'clock period attempts to cover the short. Understanding that 10 o'clock is also a major reversal time, this micro trader, having now covered his or her short, attempts to go long above the last red bar, which would put the micro trader in here around $34, and NTAP now rallies right into the 10:30 or 10:35 in that area Eastern Standard Time frame. Now, this is where we would teach our traders to exit the trade. This stock rallies right into the next reversal period. It also happens to coincide with a retest of the opening price. Again, as we can see, the stock continued to move higher, but this is where we would encourage our traders to exit, a rally right back to the opening price. Now, what we find is that this stock rallies right into the 11 o'clock hour. The micro trader understanding that 11:15 is when market makers start getting hungry. The aggressive market trader would attempt to short the stock below the last green bar here, with the idea of covering somewhere around the 12 o'clock, 12:30, 12 o'clock reversal time frame. Next example is Sun Microsystems, symbol SUNW. The same scenario. The stock trades for the first 5 minutes of the day. The micro trader marks off the high, then marks off the low, and then simply waits. The next 5-minute bar violates the low of the first 5-minute bar, drops all the way into the 10 o'clock time frame. The aggressive micro trader would attempt to get short there and cover sometime around 10 o'clock. Understanding that 10 o'clock is also a reversal time, the micro trader would attempt to go long the stock after covering the short around the 10 o'clock area the instant the stock trades above the last red bar here, with the idea of the stock rallying right into the next reversal period. Note also with Sun Microsystems that 11 o'clock marked the exact top of this micro move to the upside, and the stock from this point drifts all the way into the 12 o'clock reversal period. Same scenario. 5-minute low violated, drops right into the 10 o'clock reversal period. After covering the short, the micro trader attempts to go long around the 10 o'clock time frame if the drop went right into 10 o'clock. This rallies right into the declining 20-period moving average, which is where the trader is instructed to sell. Note that at the very top of this micro move topped out at 11:15 Eastern Standard Time. The aggressive trader would look to go short below the last green bar with the idea of it dropping into the next reversal period. $9.30 breakdown. Again, drops right into the 10 o'clock reversal time frame. The aggressive trader, after covering the short, would attempt to perhaps go long if the drop went right into the 10 o'clock time frame. Stock rallies right into the declining 20-period moving average, dips a little, and then continues. This is where our traders would be instructed to sell at the declining 20. The stock rallies right into the 10 o'clock reversal period. All right, retest the prior high of a former day. And again, the aggressive micro trader, understanding that 11 or 11:15 Eastern Standard Time is a major reversal, looks to short below the low of the last green bar with the idea of the stock dropping all the way into the next reversal period. ITWO, same scenario. 5-minute breakdown. We have a lot of examples with the 5-minute breakdown. That's what the NASDAQ market has been doing as of late quite frequently. Trading after the first 5 minutes of the trading day, marking the high of the first 5-minute bar and the low. The next bar breaking below the low, the trader trying to get short with the idea of the stock dropping right into 10 o'clock. Reversal around 10. The aggressive micro trader would attempt to go long above the high of the last red 5-minute bar. The stock rallies right into the prior high or right toward the open, which is where our traders would be instructed to sell. Note that the very top of this intraday move happened exactly at 11 o'clock. The aggressive micro trader would attempt to go short if the stock rallied right into the 11 o'clock period. Go short below the low of the last green bar. And the stock drops right into the next reversal period, retesting the day's low. Here's a stock that basically the 5-minute bar is measured. What's interesting about this is that there was a dip below the 5-minute bar, but the stock failed to really drop and it buoyed right back to the upside. This is an indication that the stock does not want to go down, and this is when the pristine 30-minute rule comes into play. The 30-minute rule calls for us allowing the stock, now that the 5-minute breakdown has failed, we now move to the 30-minute time frame. We do not do anything for 30 minutes. We let the stock trade for 30 minutes. After 30 minutes of trading, we mark the high established during the 30-minute period. And if the stock manages to break above that period, the high established in the first 30 minutes of the day, we look for the stock then to have a micro move into the 11 or 11:15 reversal time frame. Note that at the exact intraday top of this move was at 11:15. The aggressive trader could attempt to go short the stock once it trades below the low of the last green bar right into the next reversal period. I'm speeding up here because I have a few minutes and I do want to get through most, if not all, of the material here. Drop into the 10 o'clock period. Right? Note that whenever I get equal highs throughout a 30-minute period, I'm going to mark those highs off, because a blast off through those highs typically kicks off a very powerful move. So if they're at relatively equal highs for a full 30 minutes, I'm going to use the pristine 30-minute buy rule. I'm going to mark the high established during the first 30 minutes of trading and buy the breakout above those highs, looking for a rally right into the 11 o'clock reversal time frame. Note that this stock gapped down this following day after forming a high late the prior day. This rally goes right back to that prior high, which is where we would instruct our micro traders to sell. This breakdown happens to be around 11 o'clock. The stock pulls back all the way to the rising 20-period moving average. The aggressive micro trader would attempt to go short if he liked. Note how far away from the 20 it is. Below the low of the last green bar, with the idea of the stock dropping into the next reversal period. Here's a rally into the 10-10-10 area. Again, it's not always exact, but note how far away. That's the key. Far away from the 20, around the 10 o'clock reversal period, mark off the low of the last green bar, because if it cracks, oftentimes it'll drop all the way back into the next reversal period. This is a 10:30 reversal period bottom. We have a narrow range bar here. Narrow range red bar. The aggressive micro trader attempts to go long above the high of the last red bar, and the stock rallies right into the next reversal time frame. And here is a declining 200 period moving average. This, by the way, is a 15-minute chart, not a 5-minute chart of LSCC. And note that we're looking at several days on a 15-minute chart. Note this high, which was established in the early part of the following day, and then the severe decline. Then the next day, the stock rallies to retest that high, and at the same time, retest the declining 200 period moving average, which, as you know, acts very much like God. The stock drops all the way back down to the downside. So oftentimes a micro trader looks for these combinations where it rallies into the 10:30 reversal period near a prior high and at a declining 200 period moving average. The aggressive micro trader would attempt to go short below the low of the last 15-minute bar. Phase 2 trading tactics. We primarily use in Phase 1 the 5-minute time frame. In Phase 2, we primarily use the 15-minute time frame. We want a larger time frame because we want to be more sure of the plays in the midday doldrum for obvious reasons. It's that black hole that will rob us of our profits. There are several trading tactics we use with the 15-minute chart during Phase 2. We use the 11 to 15 topping and bottoming play, which we have actually been covering. We use the go to lunch play. We want you going to lunch too, right? That's the time of day that's precarious, so go to lunch. Make use of it. The other trading strategy is the 15-minute trading dip. This is a dip on the 15-minute chart, or in a downtrend, a rally on the 15-minute chart. And then the 1:30 reversal play. Remember, the 1:30 time frame is our most potent Phase 2 reversal. Let's go. I have to speed up. Note how far away this 15-minute chart got from the rising 20-period moving average. This is the leash. That's the dog. The dog has run too far away. The leash is going to pull the stock back in. And if this rally or top happens to coincide around 11, the micro trader who understands this concept is all over the stock the instant it trades below the low of the last 15-minute bar, knowing that the leash is going to call the stock in. Here is another 15-minute chart of Citicorp rallying right into the 11 o'clock time frame and the declining 200-period moving average. God, this stock is doing nothing but going down. The instant it trades below the low of a prior bar. It wiggled around a little bit and then gave up the ghost. 15-minute chart. Note that yesterday, this is the most current day. The prior day, note the 15-minute rally right off of the rising 20 into the 130 top. And that 130 top happened to coincide with the declining 200-period moving average. This stock is doing nothing but going down the instant it trades below the low of the prior 15-minute bar. The next day, 130 proves once again to be a turning point. 15-minute chart, the stock drops right into 130. Red bar, red bar, red bar, red bar, green bar. The micro trader understanding the 130 time frame reversal would look to buy the stock the moment the instant it traded it above the high of the last 15-minute bar. Now again, note, I am only looking to do something during these times. The other times I'm reading the paper. All right? These times mark the times where the odds shift in your favor. The other times we don't know what's going to happen. It's like shooting from the hip. But during these times we have an edge. 15-minute dip. Note this 15-minute chart rallies right into, I'm sure you can guess it, the 11:15 time frame, peaks out, but then has a 15-minute dip. This bottom is exactly at 1:30 Eastern Standard Time. The trader, knowing that the stock has dropped into 1:30, looks to buy the moment, the instant, right around 1:30, the stock trades above the high of the last 15-minute bar, and it rallies right into the 2 o'clock reversal time frame or the 2:15 time frame. Another 15-minute chart of Novelis. The stock rallies to a new high on the day, forms a double tail up there after a robust rally, starts dropping and coming in. And when I see a 15-minute chart start to drop bar after bar right into 1 o'clock, 1:15, 1:30, I can't help it today. I start to salivate on the sides of my lips, all right, because this creates a phenomenal high probability, low risk trade. If only, not any 15-minute drop, understand this, a 15-minute drop into 1:30, I am all over the stock the moment, the instant the stock trades above the high of the last 15-minute bar, and we get an explosion, yes, you guessed it, right into 3 o'clock. Here is an 11 o'clock top play, a 15-minute rally right into 11 o'clock. Note that it retests a prior top as well a couple of days ago. Double tail up there, the stock drops right into the 215, the 130. This circle is 130. 230, the breakout happens in earnest. But the bottom of this dip is at 130. After 130, the stock drops into 130. The moment, the instant the stock trades above the last high, the high of the last 15-minute bar, the micro trader's all over it. Last phase of the day. Okay, we'll breeze through this. The trading strategies are the following. The 3 o'clock topping bottoming play. Nothing different than the 10 o'clock, nothing different than the 1:30. Now it's the 3. Okay? 200 period moving average play. We talked about that already. And then the late day breakout play. Circle this one. I want you to write it in all capital letters. This, the late day breakout play, is the most important intraday micro trading tactic of all. It is the most reliable. If you have been amazed at some of these turning points, you are going to be amazed as you begin to practice this at how often this pattern, this late day breakout and breakdown play will reward you. Here's an example of the 3 o'clock top into the close. The stock on the 15-minute chart rallies to retest a prior top on the 15-minute chart, and it happens to coincide right at 3 o'clock. When I get a rally into 3 o'clock, that's one of those salivation times, especially if I can combine it with something else like a prior top. The moment, the instant, the low of a prior 15-minute bar gets violated, I am all over the stock trying to get short. All right? Looking for the stock to drop into the next reversal period. Here's another rally. Now, look how I'm combining things. I've got my reversal time at 3 o'clock. The stock rallies right into 3 and the declining 200 period moving average. All right? If I ever find out that any one of you have spotted this scenario and have not acted, you will have to answer to me. All right? When you have these things that come together, it's like one thing moving the odds up, another thing moving the odds up, and you just have to do it. It's a numbers game. So I combine my time with my moving average. This stock is doing nothing else but going down. The last trading strategy, the most potent, the most powerful, the venerable late day breakout play. We've talked about it briefly. It is where the first move of the stock is up. The stock is up on the day. That's criteria 1 of the late day breakout trade. The stock is up on the day. Criteria 2, the stock is above its opening price. Now, a stock can be up on the day and below its opening price. But no, in our case, the stock must be up on the day and it must be above its opening price. Third criteria, the stock should be trading at or near the high of the day, basing sideways during lunch. I want to see the market makers go to lunch, and when they go to lunch, I'm going to be watching the stock like a hawk. And if I see a stock during lunch that does not drift down, but basically goes sideways during lunchtime when the big man's away, I know that if the first move was up, now the second move sideways at or near the high of the day, the third move is going to be up to continue move one. 4, stock breaks out late in the day after 2:30 Eastern Standard Time. So the criteria again, up on the day, above the opening price, the stock must be trading or basing at or near the high of the day, and then I want to see the stock trade to a new daily high sometime after 2:30. If we look at this chart, a 5-minute chart of PeopleSoft, I want you to note that the last move on the 5-minute chart was up. Then our market makers went to lunch. Note how flat and tight the sideways pattern was. The instant the stock after 2:30 trades to a new daily high or above the last consolidation, the micro trader is all over it looking for a micro explosion to the upside. Let's look at the next chart. Biomet. Notice how the first move stopped dead in its tracks. On this one, you can see the time, right at 10 o'clock. The micro trader is attempting to jump on this stock the moment it trades above the high of the last 5-minute bar after 10 o'clock. Stock rallies right into, you guessed it, 11 o'clock. Stomachs start rumbling. Market makers, New York Stock Exchange specialists go to lunch, the good old boys club. Note how the stock is basing at its high during lunchtime. These guys are out having huge lunches, drinking bottles of wine and beer and so forth and so on, and the stock is not dropping. That's a sign of strength. At or near the high of the day, late in the day, after 2:30, the stock explodes to a new daily high. The micro trader is attempting to capitalize by zeroing in on the breakout. Here's the criteria again. Criteria 1, up on the day. Criteria 2, the stock is above its opening price. Here's the open. Now the stock's here. The stock is trading and basing at or near the high of the day. It's an indication of strength. Sometime late after 2:30 Eastern Standard Time, the stock breaks to a new daily high. This stock has done nothing but continue the first move. This is the easiest trading pattern to make money. And you know what? It happens every single day. God bless.